You see Chinese demand actually growing by just 10% of the rate seen in 2023. Could Chinese demand have already peaked?
It's possible. It's very possible. As you say, we see Chinese oil demand growing by about 140,000 barrels a day on average this year. But for the 6 months, past months, Chinese oil demand was lower than it was last year. Of course, last year was exceptional. We came out of COVID lockdowns and industrial activity really picked up. And now we're seeing this slowdown. And it's not just the economy and the slowdown in the construction sector, but it's this transition to EVs, high-speed rail, and gas in trucking that is undermining Chinese oil demand growth. So we're seeing this continuing forward. We do expect growth in the medium term in China, but much weaker rates than we've seen in the past.
Toril, if China gets their act together and actually stimulates and uses bazookas, could you be overly pessimistic about how much oil they need in the future?
Of course, we think the stimulus measures that have been put in place, it's not going to impact materially the demand growth this year. So we're pretty confident that oil demand growth in China this year will be in line with what we're expecting for the year. Of course, it could impact the demand growth next year. We do expecting Chinese oil demand growth to continue in the medium term next year and to 2030, but a shift from transportation fuels more to the petrochemical sector, and this, of course, could be impacted if the stimulus measures are impacting the economic growth in the country.
Toril, with the election of Donald Trump, how serious are concerns about a trade war, and what does that do to demand for oil?
I think it's too early to say. We're waiting. Of course, the IEA is looking forward to working with the new U.S. administration and its energy policy goals in the coming years. But I think it's too early to know the impact of any policies that have yet to be defined. But it's obviously something that we're watching very closely here at the IEA.
I mean, some of the couple of things that, we're looking out for in terms of policy is, for example, if Donald Trump were to renew his campaign to squeeze Iranian oil. Is there enough oil elsewhere to fill that gap?
Of course, Iranian exports, they have increased quite significantly over the past years. And so far this year, Iranian exports are hovering around 1.5, 1.6 million barrels a day, mainly to China. And this is, of course, if sanctions were tightened and Chinese buyers would stop taking that Iranian oil. We're seeing a market that's relatively well supplied. Of course, OPEC plus countries, they have voluntary production cuts in place that they're looking to unwind. Now the Producer Alliance postponed the unwinding of those cuts for another month from December to January as the market looks well supplied, spare capacity in other countries. And just in generally, we're seeing oil supply growth from non-OPEC producers in the Americas, that is the US, Argentina, Canada, Guyana, and Brazil, adding more than 1 million barrels a day between them to supply both this year and next year, which on paper is enough to meet our expected demand growth of about 900,000 barrels a day this year and 1 million next year. So all in all, we see the market well supplied, even if Iranian volumes would be cut back somewhat, and it would leave the room for others to increase production.